Money FM 89.3. Best of breakfast. The bigger picture, only on Money FM 89.3.
Good morning. Welcome to the bigger picture of me, Ryan Huang. And it's all about tariffs this Thursday morning. Asian markets starting the day deep in the red as they grapple with the potential impact of both on the economy as well as businesses. So a bit of a recap. Donald Trump says he will apply a minimum 10% tariff on all exports to the U.S., with dozens of countries with the largest trade imbalances facing even higher rates. So we are looking at, for example, China 34%, the European Union 20%, Vietnam 46%. So all this as we see volatile times for markets to navigate. And we've got some help this morning with Quek. He is the Senior Portfolio Manager at Paragon Capital Management Singapore. Good morning, Sean. How are you doing this morning?
Good morning, Ryan. Obviously, it's a busy morning after all the news.
Yeah, very, very busy morning. So I think we've got to start there first. No, Tariff Thursday. How is Q2 with tariffs on the horizon potentially shaping the earnings to come going to affect your approach towards investing in markets right now?
Sure. Okay, I guess two parts to it. Firstly, looking at what's going on. So I think it's not totally unexpected with Trump's presidency. I think the market has been expecting more uncertainties in terms of growth as well as inflation outlook, given the kind of domestic and foreign policies that he's pushing through. So in the near term, we should continue to see volatility. I mean, I think that's really, saying very little. But at the same time, because the impact on inflation can be meaningful, so on the monetary policy side, we might not get to see the Fed, continuing with the rate cut that they have done last year. So I think that's given the markets quite a lot to worry about. In terms of our fund, we actually, coming into this, we've been relatively well positioned since the second part of last year. We have actually been navigating out of the US. We've been underweight the US. We've been overweight Europe and China. At the same time, we have actually been raising our cash levels as well. Right now, our cash levels is as close as to 20%. In that sense, we are prepared for some of this volatility. But of course, again, the outlook is uncertain. So for us, we tend not to react to market movements on a day-to-day basis. So we'll wait and see how the rest of the countries respond, for example, and domestically, whether on the fiscal policy side, there are more actions from the US policymakers.
Yeah, so lots to unpack here. And we talked about all these tariffs coming through stronger than expected. How does this affect your outlook, for example, earnings? Do you have to recalibrate the potential higher odds of a recession, for example? Is that what you're going to be looking at?
Yeah, well, definitely. So again, what he's doing obviously has impact both domestically to the US companies, because effectively the US consumers will have to pay more, and the tax collected from those spending, right? A lot will depend on how the policymakers rechannel that back into the economy to help support the economy and to prevent potentially a recession in the US. And of course, outside the US, given that this is actually a very widespread action that they have taken, it's not as targeted as the market has anticipated. So the impact on the rest of the world actually can be quite meaningful as well. So again, a lot will depend on how those governments react. So for example, are they going to retaliate? So far, the retaliation has been very calibrated, measured, but we don't know how things are going to evolve going forward. And of course, domestically, so let's say for example in China's case, they are more or less anticipating some of this, and domestically, how are they going to change their fiscal policies, for example, in response to this tariffs?
Yeah, you've been watching China very closely in the past few quarters. That is, of course, a market that is going to see 54% tariff rates, and you talk about raising cash in the past quarter. Is that going to be tempting to look at a chance for this to buy on the dips, for example, in the space of AI?
Well, definitely we're constantly on the lookout. So, on one hand, when we feel that valuations are more stretched, which is actually, one of the main reasons we raised our cash levels in the second half of last year, that's in anticipation to any negative surprises that will impact the stock prices more significantly. So we are on the lookout constantly. On the other side, for opportunities to get back into the market as well. So clearly, yes, this volatility in some ways will create opportunities. But for us, again, we tend not to jump in. We would like to see, how things play out fundamentally before we start to make our moves.
Yeah, I think with all this uncertainty, a lot of investors are looking at places to find more defensive positions. Where are you looking at some of the areas that you think will be worth looking at? I think Singapore has been doing quite well in that regard.
Yeah, sure. So as I mentioned earlier on, because we feel that some segments of the US market in terms of valuations have been stretched and growth expectations have been quite high, we've been moving out of the US. So we'll move into like Europe and also China. And within that, I think we are more positioned into more defensive names. So we're talking about, consumer staples as well as companies that are more domestically driven. And in terms of Singapore, if you look at the headline numbers for Singapore, is relatively less impacted by this round of tariffs. Of course, Singapore compared to the rest of the big boys, I mean, we're small, and at the same time, there's actually a US FTA as well. So I think the direct impact for Singapore is going to be less meaningful, but at the same time, there is a lot of indirect impact because Singapore is a very open economy as well. So we will have to see how things play out. Again, for example, how aggressive the pushback or retaliation we're going to see from some of our neighbors in Asia to really have a better idea of how that's going to affect us. In the short term, I mean, typically Singapore is a more defensive market, so I think that should actually provide some defensiveness in terms of where investors can consider positioning themselves.
Yeah, so very tough times to navigate with all the uncertainty for markets. So we've got to keep an eye out for what's to come. April 5th is when the 10% tariffs kick in. And then April 9th is when the higher tariffs kick in. Of course, it's a bit of a small window for a deal to be struck. So we can't rule out these changes coming forth as well. All right, we'll be in conversation with Sean Quek. He is the Senior Portfolio Manager for Paragon Capital Management Singapore. Sean, thanks for your time this morning.
Thank you for having me, Ryan.
All right, great having you on the show as usual. Stay at Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.